This coronavirus has not shown Australians at their best, and I'll have some tips at the end of the show about how we can do a bit more for others, because this is not just the health challenge, it's turning out to be a bit of a moral one. But for now, we're seeing more selfishness at the shops as people panic and brawl over toilet paper. But what should you be buying if we really do get to the stage where suburbs, even cities, are locked down, as they now are in Italy, as they were in China, with some success in stopping the virus? Well, I checked with America's Federal Emergency Management Agency, which has got a list of these sorts of things, and funnily enough, toilet paper isn't on their list. But there are other things that perhaps you should really have in your house that you should look at. They include canned meats, fruits, soups, vegetables. Well, they don't say soups, I say soups, canned soups. That will last, just make sure you've got a tin opener. Protein or fruit bars, peanut paste, which is high energy, dried fruit, canned juices, and non-perishable pasteurised milk, if you really can't do without your coffee. And food for infants. And you don't need to go and loot the shops for this. A couple of weeks' worth of stuff at most for now, and take your time buying it, because we're nowhere near the point of lockdowns yet, and we're not running out of food or people to deliver it. In fact, to calm this panic buying, I thought the head of the Australian Retailers Association made a lot of sense today on Sky. He said local councils should get cracking and suspend the rules for the moment that say that trucks, including trucks for supermarkets, can't use the roads at night.
There are exclusion times in most places in Australia, and they're local government exclusion times. So a delivery may not, as an example, be able to occur from 10 p.m. at night through till 7 a.m. in the morning. Now, one of the problems we're seeing is people are panic buying. And can I really emphasise this point? There's no need to panic buy. What we actually need to be able to do is to get the trucks in overnight when there's nobody in the stores, so that when customers walk in, they look at it and say, wow, what's the problem? There's lots of stock on the shelf. The trouble we're seeing is that when people see shelves that are half empty, they think there's a major problem and they rush out and panic buy.
Plain sense. I hope the councils are listening and do something about it quick, smart. But talking about panic, and not panic buying but panic selling this time, another very bad day in the stock market. That's recovery we saw on Friday, partial recovery, followed today by another huge drop, nearly 10%. Joining me is the Australian's economics editor, Adam Creighton, via Skype as well, because he is still in isolation. Adam Creighton, it's good to see you so healthy. Should people with shares buy, sell or sit? Asks someone with a vested interest.
Yeah, well, look, certainly the temptation can be to sell, but my advice, for what it's worth, and of course I'm not a professional advisor, would be not to sell, not to lock in these extraordinary losses, which I think now over the past few weeks are coming up to 30% in some cases on the major stock markets around the world. The dividends that underpin these stocks have not fallen, surely, by anywhere near that amount, and so the income generating capacity is still there. So I would say, and certainly that's what I'm doing sort of in my own situation, I'm not selling. Indeed, I'm actually thinking of buying into the market, to be quite honest, because if you look at the price-earnings ratios of the major Australian companies at the moment, they're extraordinarily good value. I think I looked at Qantas today, and it was something like 5 to 1, which essentially implies an interest rate, if you like, or a dividend yield of about 20%, which is very, very cheap. Of course, that said, prices could fall further. No one knows, obviously, but history says don't sell at the bottom.
Yeah, well, I bought at the bottom on Friday. I was congratulating myself, and now I'm weeping. But never mind, what goes down might come up. What caused today's big drop?
Well, look, investors around the world are still grappling with trying to ascertain what the impact is on the real economy and indeed ultimately the financial system from this crisis. Interestingly, if you go back to the financial crisis, that was a case of where a banking problem infected the real economy, whereas this time it's the complete opposite way around. There's a problem in the real economy, and of course that is the virus. And I think it's the problem for authorities now to make sure that it doesn't turn into a financial crisis as well. And so that is why you're seeing central banks around the world take various actions in lowering interest rates, in promising to buy government bonds. And we're certainly going to see more of that this week on Thursday when the Reserve Bank here makes further announcements. And indeed, you'll probably see further announcements from the Commonwealth Government as well. So expect a lot more volatility, I think, in financial markets over coming days. And that's just because the uncertainty is probably greater kind of hanging over the economy now than any time in 12 years.
Well, talking about the real economy and the various things you're mentioning, the Federal Reserve in the US cutting interest rates to about zero, our government looking at another package of spending perhaps this week, and our Reserve Bank, meanwhile, saying it's ready to buy back billions of dollars in government bonds to put more cash in the economy. What would that do? Is that like a Hail Mary thing? What good would that do to the economy?
Well, traditionally, government bonds are the safest and most liquid class of assets, and so central banks want to make sure that investors around the world feel confident in trading in those assets. And there was a real problem late last week where suddenly everyone wanted to sell government bonds, which is a very unusual thing at the same time as the stock market's falling. Normally, those two asset classes move in opposite directions, but that didn't happen last week. There were so many sellers of government bonds, Australian government bonds, US government bonds, that central banks decided to announce that they would basically buy as many as they needed to buy. And of course, that may entail creating artificial money, which is a form of quantitative easing. But that has certainly calmed the bond market, and I think that was a good move. That's something sensible. It just remains to be seen whether that calm is kind of maintained over coming days.
Now, the government's second package coming up, we don't know much about what will be in it. I wonder, have we moved from the bit of just trying to stimulate the economy by putting cash in people's hands so they go out and spend, or should the government more directly be rescuing important businesses that could be collapsing because there's no cash flow at all, and keeping them alive until the economy recovers?
Yeah, well, certainly it's the case in the airline industry, I think, where there's going to be serious problems. And indeed, it looks like Virgin is kind of teetering. And I think it's very important that the government ensures that if there's no buyer for Virgin, that it doesn't just collapse, and maybe in a worst case, the government has to buy it and basically have it on its own books and run it at a loss until the economy improves and it can sell it again. And it's not just the airline industry where that's the case. I think we've got to kind of think outside the box a little bit and realise that we do have to keep, large businesses in particular going, and also smaller businesses too. I think the quickest way to help businesses is I think to give them a tax holiday of various sorts. That obviously helps their cash flow. The handouts to pensioners, of course that was reasonably well received, but when you think about it, pensioners already have the pension. They don't have to worry about loss of income. They're always going to have the pension. Indeed, anyone on welfare is still going to get their welfare check. The real concern here is of wages drying up in the private sector as firms lay people off, and so that should be the highest priority to stem those layoffs as much as possible.
And of course, those pensions aren't going to go on Virgin, and if Virgin goes, then we're back to, almost a monopoly in terms
that's
of
exactly right.
the main airline.
Exactly.
We can't afford that. That is a strategic error if we allow that to happen. Adam Creighton, thank you so much indeed for your time.